Hey traders, welcome to another edition of the Crypto Lab with Alex, featured by Trading Analysis. We are going to do a little bit of macro in light of the next week Fed's meeting. We have a couple of meetings these 2 weeks. All five major banks are actually have their meetings in regards to rates. Bank of Canada already raised rates yesterday, but not for predicted 75 basis points, only 50 basis points on the uprise. So that was a surprise, which kind of signals we might be on a path of slowing down the increments of how big the increases of the rates will be on the futures meetings. So we just had ECB. ECB hiked 75 basis points, which was widely expected. So that is now at 2%. So we have still Bank of Japan, Fed, and Bank of England to go. Bank of England and Fed are the next week. So we're gonna look what the market is looking for the next couple of Fed meetings. We are also going to look the situation with the US dollar and 10-year yields, and then we're going to switch to cryptos and look thoroughly what's going on with Bitcoin and Ether. So if you remember our previous Crypto Lab, last Thursday was looking for a little bit of the upside move in cryptos, and I'm going to go into details when we finish this observation about the Fed meetings and the yields and the dollar. As usual, you can leave your questions in the box, in the chat box, of course, your comments, and we are going to look your charts after the presentation is done. So let's dive in. Let's start with CME FETL, which is basically how the market is seeing where the rate is going to go in the next couple of meetings. Let me just anglare this chart for you. So this is the 2nd of November. The CPI was at that 8.2. The last CPI, of course, the core rises 6.6, which was the biggest rise in the last 30-40 years. When I looked the inside of this report, the transportation costs and service costs was one of the biggest one rising. And as you can see, 88.5%. Yesterday it was 92%. Market is pricing in that the Fed is going to hike 75 basis points. So we are currently at 3 to 325 range. So after 75 basis points, we are going to be at 375, 4% range. So this came pretty sharply on the upside. 11.5% that we are going to see a smaller increment hike around 50 basis points. So that was after the Bank of Canada rate hike was less than expected. I don't think that Fed is gonna slow tomorrow for 50 basis points, although some of the figures we are seeing in economy and the demand destruction they're trying to actually install upon the markets and economy starts to function. So I still think they're gonna go for 75 basis points, but as we go to 14th of December, which is the next Fed meeting, the kind of a certainty of 75 basis points is now lower, and it's going to favor of 50 basis points. Basically the pause over 25 basis points is now at 7.2%. So if we see here this probability, which is 87.3%, that we're gonna be in the range of 3.75 to 4. If you go to 14th of December, so 25 basis points, 6.1% probability, and 50 basis points is 59.2%. Of course, we're gonna track that, but I think according to this yield chart, which I'm going to show you, which kind of agrees with this outlook, it's definitely showing a slower pace of the Fed moving rates on the upside. So if we look 10-year yields, we came very close to our target for the this intermediary or primary wave 3, intermediary wave 5. So we have this scripted according to the Elliott Wave methodology, which is our preferred method. How do we observe markets at trading analysis? So we have from the COVID start in 2020, we have a wave 1 and wave 2. So wave 1 was very sharp on the upside, 3 waves down in a wave 2, and then we have a yellow wave 3 progression. One of the usual fib levels that we looked at wave 3 is going to progress is 1.618. Which is around 4.59. We came slightly below it, which is still okay, 4.32. It is not necessary that you reach exact target. Usually these signposts of the fibs are just notifying the one who is looking actually about the zone where you can expect a potential reversal. So I do see potentially some type of a wave 4 in the next couple of months, and then a final push up in a wave 5 from where the rates can continue to drop pretty sizably in 2023. My timing for that will be around March, because I see a couple of things starts to align from the different assets classes. So we also can look what is going on with the US dollar. So we are looking this final sequence on the upside. What we think about the pattern is this is the finishing ending diagonal pattern, because from this wave 4 we see only 3 waves on the upside, and that usually depicts one of the ending patterns that henceforth is called an ending diagonal, which goes in 3 waves all the way in a little bit of the upside move, but a little bit skewed, where actually we're going to see this pattern completes this cycle of the dollar, and then we can expect a little bit more sizable push to the downside. But nevertheless, if we count this in a manner either corrective or impulsive in 5 waves, or A, B, C, X, A, down in B, up in C, after a year and a half, most likely dollar will continue its rallies on the upside above this 120 level. The question is, will this correction will be of a bigger or a smaller magnitude? So of course we cannot be certain about anything, but definitely this sequence which started in the February of 2021 definitely depicts a 5-wave move with the ending diagonal ongoing on the upside. So we're going to spend more time. Ending diagonals can be also treacherous as triangles, so they take plenty time to actually unfold, because you need to go back and forth with a small 45-degree movements on the upside, but very sideways to up movements, which can consume a lot of time until they finally unfold. So we do see this potentially starting to move in a dollar further pretty soon on the upside. Then again, a sideways consolidation, which needs to enter into the territory of the wave 1, which is this first sequence, and then the final push on the upside in a wave 5. So ending diagonals can be two types. There is a contracting one and expanding one. Expanding ending diagonals are pretty rare, and all of these patterns has their rules inside of them, because the expanding one, you have a wave 1, 2, so wave 3 should be bigger than wave 1, and wave 5 should be bigger than wave 3, so it means it expands on the upside, while the contracting one is a completely different. The wave 1 should be the longest wave, the wave 3 should be the middle wave, and the wave 5 should be the smallest one. And then usually what you see, it's a very sharp reversal to the opposite side of the current trend. So we think this is still an uptrend for the dollar. We don't have still a 5-way move lower. reaching some of the support levels, what we usually look as a change of a trend. So we cannot say that the trend in dollar is changed. This is just a small push to the downside, and therefore we're going to look still for a little bit more of a dollar strength until we start to move sharply lower into a bigger or a smaller correction in 2023, 2024. So let's look one more thing. Let's look total crypto market cap and what is going on there. We have been tracking this chart for a long time, so we still look for some type of a triangulation here. We do track this either in a flat or in some of the features which we depict as a five-way move still need to complete further on the upside. So this will be some type of a wave one, up down in a wave two, up in a wave three, flat for a wave four, and then a final push up in a wave five towards 2023 from March, April to 2024, let's say June, July. We will talk about the timing a little bit when this pattern starts to unfold. So we are still not completely bearish. There is a couple of things why. First, we are very far from the wave count invalidation. Wave count invalidation is one of the rules in the Elliott Wave methodology. One of the rules is that wave 4 cannot enter the territory of the wave 1. So we don't want to see a break of this 388 billion on market cap. I still think, as in the chart of Bitcoin, this is just a part of a larger correction. So we still do track this potential five-way move lower, and this we track as a possible triangulation with a little bit more to go with the last move down in this fifth wave, and then we hope we're going to see some type of impulsive development which will add to this probability that we are going to start to move further on the upside. So let's dive into Bitcoin. Let's look what is going on the Bitcoin chart. Let me just display a little bit more higher time frames in the Bitcoin. So I do track this extensively. A couple of things on this chart I already explained. Many things. How do we view this? From the perspective of many things that you can see and observe in the chart. This RSI on weekly, which I usually look, is relatively on the lower levels. It kind of looks it's going to go in a small pullback and then continue further on the upside. We are trading below weekly 200 moving average, which is not a nicest thing to do, which means that the upper range of this 200 moving average will be a pretty solid resistance if we attempt to move further on the upside. Wave count validation, of course, is here. It's a little bit below 14K, which is going to be our signpost. What is going on here? As you know, I'm still going to look for a bullishness on a Bitcoin for this last move up in 5 ways. This wave 4 is pretty much elongated, I will say, so it takes a little bit more time. 2618 ratio between time elapsed in a wave 2 and a wave 4 is the last ratio that we're going to look and consider that this is a wave 4 in making. If we cross this in a sideways manner, we will dismiss the observation that this is still a wave 4, and we're going to start to look for a different labeling or a different solution. So for now, we are still not around there. 2618 comes around February, March of 2023. So I'm still going to look this as a potential flat. And this consolidation here, as we talked the last week, I still look as a probable triangle or a flat. So if we go inside of it, let me just adjust this chart so I can show you a little bit more closer look. This has been a very choppy move on the upside. We can label this as a complex correction on the upside in a wave A, 3 waves down in a wave B. So we might be in some type of a complex correction upside in a wave C still. This also can get a little bit more complex inside of these particular waves in triangles. So triangles are very sideways balancing force patterns, which means that bulls and bears basically are equal in strength because the market cannot decide, as you can see, on which side it wants to go. You have a kind of a bullish sentiment, and then you have a bearish one, and then again you're going to have a bullish one, bearish one, bullish one, and then finally some of the guys in the overall market psychology fabric will lose its patience, and actually we are going to see the last final move push to the downside. My target is around 15 to 16K. For this last move, also one of the probabilities is that we get some type of a flat challenging this move, 200 moving average on daily, which comes around 25K, and from there we might see one more push down as a final reversal. So still these two patterns, one is a flat and one is a triangle, is still on the table. I'm still particularly very much I would say prefer to see a triangle because it's much more predictable pattern in my view, and there is a solid basis looking at this sideways consolidation that we are still potentially in this triangulation, which means we're going to get even more complex as I look what the stock market is doing. So the C wave can be just an ABC X ABC, so we can go a little bit more lower down to 19K and then start to shoot up again up to 22K. Then we might see a wave D, E, and then every triangle has a five legs in it, which means we're going to see more consolidation, more back and forth, up and down before we actually trace out the last movement, because triangles are usually tells you that this is a final balancing act before we see the last push and the complete reversal on the upside. To conclude on a Bitcoin, still in a range, we can go back and forth between a couple of patterns, but for now I still think we are in some type of a triangulation with one more move to the downside, because we don't see nothing on the chart which indicates an impulsive uprise, and actually that we can conclude that this was actually the last low on the Bitcoin, and that we're going to continue further on the upside, of course, unfortunately. So I think back and forth, a little bit more downside, and then around February, March, we're going to continue further higher, either in a 5 waves or in a 3 waves, which will determine the next couple of years' destiny of the Bitcoin. So let me just go over the secondary scenario. If we can anchor this wave 3 here, again, 5 wave move lower, we will make the wave counting validation here. We will go below 13,800, and then we're going to go in a big pullback in an ABC, and then a final push down will be much severe and a much bigger magnitude than actually this one is. Wave counting validation, watch these levels. It's going to be crucial. Do we go below them or do we stay above them? So I will very much pay attention on these levels here, very close to 14K. If we see this actual hypothesis of how the things are going to unfold, actually do unfold in reality. So let's look what is going on Ether. In my opinion, Ether has a little bit more substance to it, in a sense that we are trading also, despite the Bitcoin chart on weekly, which is trading below this 200 moving average. Ether is holding pretty nicely, as you can see. Towards, we have seen a nice push on the upside. This can also be a part of a complex correction with one more move down, or we're going to develop a 5-wave move, a pullback while the Bitcoin goes down, and then continue further on the upside. So I still do think this is the 4th wave in developing. There is a slight probability we are in some type also on a very skewed triangulation. I don't like this type of triangles, to tell you honestly, because they are not looking proportional. But we have seen that over the years dealing with the markets. This wave 3 goes here. This is just an A, up in B, C, D, and E, and then off we go on the upside. So we will see. I think it's still pretty much early, but Ether actually shows a very nice couple of things which Bitcoin doesn't, which means that for the first thing, we are holding above this weekly 200 moving average. The labeling might be a proper one. We came to 1.6618 ratio of time spent in the wave 2 and a wave 4. And also the RSI suggests we have a much more move on the upside, and the wave count invalidation is much far away from the current price than in Bitcoin. So the wave count invalidation in the Ether is around 366, and we are trading around 1,567. So we have almost $1,200 actually to invalidate this wave count, which is, I think, pretty far. So in my opinion, we are looking either for a beginning of this larger degree wave 5 already. We're going to see wave 1, wave 2, while Bitcoin goes down, and then continuation on the upside, or we're going to have this a little bit more kind of a X wave, trading around 1,900, close to 2K. One more push down towards 200 moving average, as you can see here, and then around February, March, as we align all of the other assets classes together, we might experience a nice continuation further on the upside towards targets between, let's say, 7, 8 to 10K. Obviously, the Ethereum Bitcoin chart supports these developments on Ether. So if we dive in on Ethereum Bitcoin chart, which we are tracking with our members regularly on the webinars, we still look this as a very bullish development for Ether, which I think is going to be preferred. I don't think the wave 2 is done. I will allow that this is not here a flat. I'm still going to go back and forth with this because I don't have a clarity in a 5-wave move here. Okay, so if we place a wave 1 here, we just move a little bit these labels. This looks to me like more developments that the wave 2 is still not done, so potentially 5 waves down in A. This is some type of a flat in B, and we go one more down, move down in B wave, up in B wave, down in C wave, which will make a secondary wave of this 5-wave move in Ether, which is, in my opinion, still has a large probability to be rising in comparison of the Bitcoin further on the upside. So the whole wave count support this. We have a leading diagonal here of an expanding type, this time in wave 1, 3 waves down in wave 2, nice 5 waves development here in a wave 3, pullback in a wave 4 without invalidating the previous wave 1. And then we have an impulsive structure, which for now it's developing towards further continuation on the upside in this wave 5. So my target will be around 0.1426 if we start to develop, especially if we see this wave 2 going a little bit more lower, and then on a smaller time frame you're going to see a wave 1 and a wave 2, which will be a very good risk reward entry for our members to continue following this up in a wave 3, 4, and 5, which definitely puts Ethereum more favorable against the Bitcoin in the next cycle on the upside. So that is all for today, guys. So I'm going to just look a couple of your requests. We're going to look a couple of your charts, and then of course if you want to further crypto guidance for the part and with the methodologies we use. One of them is looking the overall macro scene, looking the liquidity, looking what's going on in the central banks, and overall what's happening in the fiat world, and then we transfer that and pair that with our wave counts on cryptos, because we try to find these higher forces and how they determine let's say, lower time frames and higher time frames on cryptos, because definitely they're interwoved together due to liquidity. Unfortunately, cryptos are still not decoupled from the stock market. But as you can see on the on-chain analysis, most of the retails is wiped out on this last move on the downside. So only the longer term holders, which are holding Bitcoin for already a couple of years, are still not selling their Bitcoins, at least yet. So they're holding the price, actually not selling the Bitcoin in this, and this is depicted in this sideways price action. So let me see. Let me see your requests and comments. Hey, Geoff. Hello, Felix. Silver. Silver is still not ready. I will track dollar index for that, as you know. So just look the dollar index chart. Dollar index is still very well connected, or the dollar is well connected with the charts of gold and silver. So I will just recommend you to follow what's going on there. Hi Gia, hope you're good. Jeffrey, why there is a 5-wave move for a wave 4 in a total market cap? Because it's a part of a flat, Jeffrey, like in a Bitcoin. So that's one of the structures which will look in the Elliott Wave world. So flats are usually, we have a couple of type of these flats. So what's going on in a flat? You have actually basically a 3-wave move, and the first wave move down, it's actually a wave A, depends which type of a flat you have. Wave B can go around these previous highs or above it, and then you have a 5-wave move down in a wave C. So it's a 3-3-5, it's a 3-3-5 pattern. So you have a 3 waves down in A, you have a 3 waves up in B, and what is actually spooking many market participants is that this B wave goes above these previous highs. So people think that there is going to be a bullish continuation, and suddenly you see a sharp drop and actually a very sharp decline in 5 waves. So that is usually a flat. There is a regular flats, and there is irregular flats, what we call a running flat and expanding flat. So there is 3 types, and you need to know all of these patterns to see what is going on. So we are looking for expanded flat here, which means that the C wave will go below this A wave in a 5-wave move. So that's why you see a 5-wave move in the total crypto market cap, because we think before there is a probability it was a 3 waves down, 3 waves up, and a 5 waves down. Jeffrey, I hope that helps. Rune, I didn't look Rune for a long time, so let me just look what's going on. So this will be basically a 3 waves down, 3 waves up, and 5 waves down. Okay, so that will be a flat structure. So if I explain that, it will look like this. So this will be here in A, up in B, and down in C. Okay, so this is a 3 waves. 3-wave move down, 3-wave move up, and a 5-wave move down. Okay. So let's see what's going on Rune. Let me see. I didn't look, I think, that chart for a long time. 5 waves up. Actually, we didn't get that. Same as on Bitcoin. So we cannot not anchor the wave 4 here. As you can see, so A, B, C, X, A, up and B, down in C, or we can go with a couple of different structures. So I do think this is a complex correction still. I think a little bit more of a downside as the crypto. So nothing implies here this one is going further up. Okay, so we don't see anything actually of an impulsive nature in 5 waves up to actually conclude that this correction is done. Okay, let me just look weekly levels there. Yeah, still, so this is still a kind of a range about sideways movement, as you can see. So we cannot say actually we are done with it. So what you can see, correction tends to stay in a parallel channel. This is the case here. So what you usually want to do is to place a couple of labels here in a corrective manner. So this can be a simple or a complex corrections. So I don't think this one is still done. I think we're going to have a little bit more downside around, let's say, 1.1884 or around that level. So we are at 1.5. So let's say we have a little bit more downside after this small correction on the upside is done. Okay. Yeah, Solana. Let's look what's going on Solana. Let me just find a proper chart. This is just leftover labels. Yeah, so Solana, still this is not enough that we can conclude actual reversal. So if we look even daily time frame, we cannot see anything of kind of a bigger magnitude on the upside. We still even don't have a 5-wave move. So I will still not place a great of emphasis here on any of these moves, at least for now. So I don't see anything of a price action that actually escaping this range going around 44.52 in a 5-wave manner. So this is still very much in this range, which goes from previous charts. So we can look also this all range, as you can see, comes from this consolidation here before. So that will provide a kind of a solid support. As you can see, we basically are kind of mimicking what has been going here, but on a different trend. Here the trend was further on the upside. We are still here in the downtrend. So we cannot say that this is actually still completed. So I will not address this or consider this a major reversal. First, there is a couple of things. If we consider this to be some type of a leading diagonal and some big flat to the downside, there is no wave count which supports that. This is a 3-wave move lower, which kind of more depicts this as a triangle than as something of a more significant in nature. Okay, so you can easily do this and actually consider one more push to the downside towards 20, 23, 24 when this consolidation is done. So whatever you see these moves, I mean, I know people maybe starts to hope that actually this is a reversal point, but I mean, what is the probability for that? I still don't think it's a high probability. Fed is still hiking. It might slow down as we are looking with the rates. There is still no available liquidity. The situation in a inflationary front are much still on the upside because people are spending their money on a cost of inflation going higher. The expenses are much higher in life than 1 year ago. So we need liquidity to come into cryptos, and I'm always saying that. And people are just looking that we might go higher to the moon. But well, yeah, the question is where the liquidity will come from. What will, from which part it will flow in cryptos to that extent that we're gonna go and post a new high. So that is always a good question to ask yourselves. When you're dealing with the type of assets classes like this, which are dependent on the exterior liquidity coming in. So we need exterior liquidity to come in. Will that be a hedge funds? Yeah, maybe when the liquidity is a little bit more loose, when we stop the tightening cycle. When the dollar comes off, so many things, cross currents has to kind of a match that we see some of the big guys starts to maybe juggle for positions and maybe start to catch some lows according to their opinion, how this liquidity will go in the next 6 months to 1 year. So I think it's still early for that. We might be close, definitely closer than a couple of months ago, but I still think it's not the time. Okay, guys, so thank you very much on the attention. So thank you for being with us. If you want to check our work, you can visit us at tradinganalysis.com. We have an extensive coverage of cryptos with our members. Many of them have been long on Ether and Bitcoin. In this last move, we were looking for the upside movement, although of a limited fashion, higher. So I'm going to stay with this tracking this consolidation. I will say as a conclusion that we are still not there. Maybe we're going to see slow down in the increments of rate hikes. Higher economy is definitely posting some lower numbers. The earnings goes back and forth between tech and some couple of other sectors, which has a good numbers. So it's a kind of a mix, I will say. I think that we are coming to the period up to March where we're going to see a little bit more equalizing increments of rates or slower increments of rates going up after this 2nd of November, and then we might have a pause as I see the yields will move lower and assets classes, risky assets classes go higher. So let's see in the next couple of months, that's not very far, how this will unfold. Also, you can click subscribe and like our content so it can go further with this algorithm. So we will appreciate that, of course, because we would like this to be seen. And I wish you the nice rest of the day, guys, and stay well. Bye-bye.